continuation of the last lecture, last class, that is about the evolution and origin of a company, about the features of a company, about the classification of a company, and about the privileges available to a private company. Then come to the next topic, that is about the incorporation of a company. Incorporation of a company, or you can say registration of a company, or in other words you can say formation of a company. That is a very important step to give a company legal existence in the eyes of law. Incorporation of a body corporate, incorporation of a company, give its legal existence. That gives the company a legal existence. You can see the name of the company in the name of the registers kept at the register of office of the company. So incorporation of a company, whether it is a public limited company or a private limited company or one person company, or you can say foreign company or a government company, whatever type of company you want to wish to form into a company, incorporation is a very important step, very essential step to form into a company, to give its birth. So incorporation give a birth to a company, because a company is an artificial legal person. Company is not a natural person. So by incorporation we give a life to a company, we give a name to a company, we give a legal existence to the company, like other companies, and like other registered companies, having a name itself registered in the name of the companies at the register office of the companies. So incorporation of a company, it is a legal process. So legal element is involved in this, in regard to the incorporation, in regard to the registration of a company. Certain legal formalities has to be compiled with the register of companies to give it a legal existence, and that is required. It is required to form into a company, to give a life to the company, to give existence to the company at its corporate entity, corporate enterprise, corporate sector, a company, whether it is private limited company, already defined whether it is a private limited company or public limited company or one person company or foreign company or government company. So it is a legal process. For any company has to go through legal process. Company start by legal formalities, company end by legal formalities, because of the nature of the company, because of its characteristics of the company. That is a very important characteristics. Company is a artificial legal person. So incorporation step is a very important. Registration step is a very important. And for that purpose you have to file certain documents with the register of companies. You have to submit certain documents to the register of the companies to get yourself registered, to get yourself incorporated. This is a requirement. This is a requirement as per the Companies Act 2013. And this is a mandatory requirement for any company, to get itself registered with the register of companies at the domicile office of the company, at the registered office of the company, or at the situational address of the company, that is situation clause, registered clause. So that gives you an entity, that gives you a name, that defines your identity, that this type of company, this characteristics of a company exist in the corporate sector. So incorporated company is a separate legal entity on its own. An incorporated company is a separate legal entity on its own, recognized by the court of law, rule of law, because it is a distinctive feature of a company, distinctive characteristics of a company. Incorporated company is a separate legal entity on its own. A company is separate from its member. So member does not affect members, addition of a member, deletion of a member, removal of a member, death of a member, inexistence of a member, health of a member, financial status of a member, your whatever status you have as a member of the company does not affect the identity of the company, does not affect the legal entity of the company run as its own. So that's you have already studied in your class that members may come, members may go, company run as its own. So members may join the company, members may add into the company, some new members may join, some existing members may continue, some existing members may retire from the company, superannuated from the company, or some maybe die or doing the service. Some members' financial conditions, health conditions, that does not affect the identity of the company, the status of the members, the status of the owners of the company, for the members of the company, promoters of the company, subscribers to the member of the company, does not affect its status, does not affect its legal identity. So incorporated company is a separate legal entity on its own, and it is recognized by the court. It is a registered company having existence in the eyes of law, having registered in the register of companies. So it is recognized by the law for all the commercial purposes, for all the business purposes. Incorporated company has its own separate legal entity concept that is applicable to a company which is incorporated as per the Companies Act 2013. So these corporations can be identified with terms like private limited or limited in their names. So private limited, you define it as a private limited company, or limited, you define it as a public limited company. So private limited company use the word private limited after its name, or limited companies, the public limited company use the word limited after their names. So it becomes a corporate legal entity, completely corporate legal entity, separate from its owners, separate from its members. So liability of its members is limited. Liability of its members is limited. But companies' liabilities are limited because they are liable up to the beyond, to the extent, because their liabilities are limited. They have to be officially wind up by the representative members of the company, by directors of the company. They have to officially liquidify the companies and to pay off the liabilities of the company. But the liability of its member is limited up to the extent of amount not paid by them on their shares. Then come to the steps involved in the process of incorporation of a company. So there are certain steps, certain procedure, stages involved in the process of incorporation, in the process of registration of a company. A company has to go through the following stages for the purposes of registration, for the purposes of incorporation. And the very first step in the incorporation of any company, I'm talking about any company means public limited company, private limited company, one person company, government company, foreign company, any company, yeah, unlimited company as well. So any company. Now it is a limited liability partnership is there, LLP is there. So any company, we have certain features of a company and certain features of partnership as well. So any company, whether it is public limited company or it is private limited company or one person company or a foreign company, it is choose an appropriate name. So name is very important. How you call anyone else, whether it is a natural person or artificial person, how you call anyone else by his or her name. You call someone else, some person by his or her name. So name is very important. That gives you some identity, some recognition. how another person recognize you by your name. The name should not be similar, should not be identical, should not hurt the sentiments of any community, any forum, any societal sentiments should not be hurt by your name, and your name should not be any controversial name. Name should be appropriate, should not be name should be lawful, should not be illegal name, and should be acceptable in the court of law, for the filing of all the returns, for the submission of all the documentary evidences of the company. So name should be appropriate, name should be clearly defined, should not be unacceptable, should not be indecent, should be decent, should be appropriate, and should not hurt any community, any society, their sentiments, and should not remark to any society, comment on any society. A name should not be similar to any other name of the firm. It should be different from another firm. So name is very important. Name is very important. Whether you are artificial legal person, whether you are a company, or whether you are a natural person, your name is very important. By your name, that defines your personality. Your name defines your feature. Your name defines what type of person you are. So name is very important. The name of the company defines what type of company it is, what nature of company it is. So your name is should be should define your nature of your business and size of your business. The name should be appropriate enough. Your name is your brand. Your name is your goodwill. So name should be appropriate name. Then preparation of MOA and AOA. That is a very important step. Very essential documents, very mandatory. I already discussed in my earlier class. Very important document, very essential document. Preparation of memorandum of association and articles of association, AOA and MOA of the company, and it is further divided into 5 clauses. The MOA of the company, it is further divided into 5 clauses. Number 1 is name clause. So name clause defines the name of the company, and the name, but I already discussed, the name should not be similar of any other name of the company. The name should not comment or remark any society, any community, and name should not be controversial. Name should not be identical, and should be appropriate enough, should be decent, should not be indecent, should not be vulgar. Name should be suitable name, suitable, that defines you, that defines your characteristics of the company, that defines your size of the company, and that defines your nature of the company. Name should be as per your functioning, as per your nature of your company, kind of your company. It should be suitable. The name should be suitable for your company, and should be acceptable in the court of law. Then come to the registered office clause. That is your place of head office clause, name of your head office or registered office. That is should be defined. Place of your business, where all your important documents should be kept, your MOA of your company, AOA of the company, annual reports of the company, financial statements of the company, accounting ratios to be kept, all the important documentary evidence of the company, lease agreement of the company, rent agreements of the company, any other important vendor agreements of the company, sale purchase agreement of the company, all the important dealings of the company, to be kept, all the important documents of the company, register of the members, register of the employees, their details, their payroll, everything is kept at the register office of the company. That is registered office clause or domicile office clause, head office clause. Your name or registered office to be mentioned in the name at the registered office clause. The name of your registered office, name of your head office to be mentioned in the registered office clause. Full address of your registered office, full address of your domicile, place of domicile, from where you used to do your business, working of your business, all you're doing, all your commercial activities, sale, purchase, repurchase, resale, that name to be mentioned in the registered office clause of a memorandum association of the company. Then come to the object clause. Object clause define the objectives of the company, the main objectives of the company, an objective ancillary to the achievement of the main objectives of the company, and that is defined in the object clause of the company. So object should be clearly defined, and that should be mentioned in the memorandum section of the company. That is a very important documentary evidence to be submitted to the HR companies for the purposes of incorporation of the company. The liability clause mentions the liability of its members limited by nature or unlimited up to the which extent it is unlimited. So unlimited amount, unlimited extent is to mention, or it is limited by guarantee, or it is limited by shares, or it is unlimited. It is to be mentioned into the liability clause of the for the purposes of incorporation of the company in MOA of the company. So liability clause mention the liability of its members. Then come to the capital clause. Capital clause mention the capital, share capital of the company and its denomination into per share, each per share. So capital clause determine the equity share capital of the company, preferential capital of the company, community share capital of the company, or sweat equity shares of the company. Defines the capital of the company. That is capital clause. So capital clause is very important. That defines the total amount of share capital of the company and divided into number of shares of the company, and the types and kind of share capital that is also defined in the capital clause of the memorandum association of the company. That is also a very important clause of MOA of the company, the capital clause. So name clause, registered office clause, object clause, liability clause, capital clause. So all the clause is very important for the registration for the purposes of incorporation of the company, and it is to be mentioned. It should not be left blank, it should be mentioned. If anything is left blank, you have to, again you have, there is an objection in your file that is raised by the ROC of the company that your name is missing, the name of registered office is missing, object clause is missing, object is missing. That is objection is created in your file. If you submitted your file for the approval for incorporation, the ROC mentioned objection in your file that this is missing, this is element is missing in your file, and you cannot able to get it registered because you have to mention each and every element of the MOA of the company in the clauses. Then printing of all the documents, whether it is MOA of the company or A of the company or annual reports of the company, annual returns of the company, and financial statements of the company, foreign documents of the company, dealing documents of the company, it is to be printed. A copy to be printed copy, it should be hard copy, printed copy, signed by all the members, subscribers to memorandum, promoters of the company, directors of the company, you can say founder members of the company, managing director of the company, manager of the company, solicitors of the company, legal advisors of the company, company secretary is to be signed. It is to be signed by all the important officers of the company, and the stamp is very important, the stamping of all, and that make it a legal document, valid document to be present, confirmed document to be present in the, that make it as a legal document to be present in the court of law in the case of any dispute, any arguments, any disagreements. It is to be presented in the court of law. The stamping, signing and stamping makes document, printed document valid. Otherwise it is a mere piece of paper, it is not important, it is invalid, it is declared invalid in the court of law. You can't enforce it in the court of law. If it is not signed by its members, it is not stamped, there is no stamp of common seal of the company, not in the MOA of the company or any of the important documents of the company. So it is stamping is very important, essential to make any document of the company. If it is not signed, if it is not stamped, there is no value. There is no value to that document in the court of law. Court can only enforce document which is signed and stamped. Then it is legally enforceable, lawful. You can say in the court of law. As per the National Company Law Tribunal, if it is not stamped, it is not signed, it is not as per the performa, it is not properly filled up, then objection is created in your file by registrar of companies, and you have to fill those objections to get your file forward to the higher authorities for the purposes of registration of the company. Then vetting of memorandum and articles. So you have to intact all the memorandum and articles and check each and every clause is properly filled, properly compiled with, each and every page is properly signed by all the members to subscribers to memorandum and articles of association. All the pages of articles of association properly signed, properly stamped. That makes a valid document. Then power attorney to be submitted, that is to be required to be submitted as in the process of incorporation of the company, the very important document, the power of attorney. And the other documents to be filed with the registrar of companies, that is financial statements of the company, accounting ratio statements of the company, annual reports of the company, income tax returns of the company, e-filing of returns of the company, or any document, any lease agreement, any other official agreements which you have signed, any new land purchase agreement, land purchase agreements you have an agreement to purchase of furniture and fittings, whatever agreement you've done with your dealers and vendors and third parties, that is documentary evidence. Whatever transactions you are engaged with during the course of your working in the company, you should have a copy of that transaction. Whatever dealings you have with the dealers, suppliers of the company, you should have a copy of that transactions and as an annexure to be submitted to the ROC. So ROC is a registrar of companies. Then statutory declaration in e-form number 1, that is you have to statutory declare that whatever you are submitting, whatever information you are providing is true to your best. You declare yourself that whatever information I am providing in the MOA of the company or A of the company or any other important documents of the company or financial statements of the company, whether it is trading profit and loss account, balance sheet of the company, accounting ratios of the company, annexure to the accounting statement, financial statement, it is as per the accounting standards as issued by the Institute of Chartered Accountants of India, ICAI, Delhi. So we are following all the standards, all the accounting standards, all the international standards, all the general accepted standards as required for the accounting purposes. You have to declare yourself, that is statutory declaration in e-form number 1. Then payment of registration fees, that is a nominal fees which you have to pay for the purposes of incorporation, for the purposes of registration of a company. And then comes the certificate of incorporation. The company, the ROC of the company issued to you after verification of all your credentials, all your documents, and after payment of fees. The registrar of companies issued you a certificate of incorporation, and that gives you a certification that now you are a registered entity, now you are a body corporate, now you are a registered enterprise, now you can enter into contact with another party. So private company this is a privilege available to a private company. Private company can easily start a business after obtaining this certificate of incorporation, but that is not in the case of public company. Public company has to obtain a certificate of commencement of business in order to start a business. That is not privilege, is not available to public company. But private company can immediately start a business after obtaining the certificate of incorporation. This is clear to, I think this is clear to you. Then come to the promoters of the company. Promoters of the company, or you can say who have formed an idea to promote the company, founder members of the company, uh, idea generators of the company who formed an idea to start into or form into a company, and who are the initial capital providers to the company, funds provided to the company. So they are the financiers of the company, they are the investors of the company, they are the capital providers to the company, they who form an idea to promote to the company, and they are called as promoters. They are involved in the promotion, they are involved in the incorporation, and they engage in all preliminary contacts before the incorporation of the company. The promoters are the one persons who are, and the persons, they are the persons behind the incorporation of the company. So without promoters, company cannot be formed, company cannot get its birth. So birth is giving born, they give birth to the company, promoters. Promoters are the very important persons behind the company. So section 2, subsection 69 of the Companies Act 2013 defined the term promoters. Defined the term promoters. So promoters means a person who has been named as such in a prospectus or is identified by the company in the annual returns referred to in section 92. That is the definition given in section 2, subsection 69 of the Companies Act 2013 about the promoter. Means a person who has been named in prospectus. The name is mentioned in the prospectus of the company, and or is identified by the company in the annual returns. Their name is also mentioned in the annual returns of the company. It is signed by the promoters of the company. Section 92, refer to section 92. So their name is mentioned in the prospectus of the company, the name of the promoters, the name of the founder members of the company, and their name that is defined in the Companies Act, section 2, subsection 60. Section 2 of any act, I already told section 2 of any act is about definitions under the act. So the point number B is promoters has control. Promoter has control over the affairs of the company. Because why they have a control? Because they have interest in the company, they have financial stake in the company, they have financial interest in the company, in the workings of the company, they have interest in the financial health of the company, financial status of the company, and that's why they control the affairs of the company, because they invest their hard-earned money. They invest their hard-earned money into the company, so they have interest over the affairs of the company, directly or indirectly, whether as a shareholder or as a director or otherwise, or in accordance with whose advice, direction or instructions the board of directors is accustomed to act. So their advice, their direction, their instruction is very important to the BOD. So BOD are working under their instructions, or they are working under their guidance and directions. So because they invest heavy amount, maximum amount into the company, in the form of shares into the company, they are the major shareholders of the company. So they are initial investors of the company, or initial fund providers to the company. So they have a say, yes or no, into the workings of the company, into the decisions of the company, and their advice, their direction, their instructions is very important. Then come to the preliminary and pre-incorporation contracts. Preliminary contracts and pre-incorporation contracts, they are entered before the incorporation. These contracts are entered by the company if it is not in existence. The company not in existence, but company is in the process of formation. The company is in the process of incorporation. So at that time, company enter into certain contracts that is required to start a new business. Company has to sign certain contracts with the suppliers of the company, vendors of the company, or other important officers of the company. Company has to sign certain contracts. Company has to call certain persons, individuals, for the workings of the company.